Hey everybody, hey traders, Chris Pulver here. Welcome back to another installment of my Keep It Seriously Simple video series where I'm helping traders of any ability level in any financial market trade to be more consistently profitable. Now, this is another lesson that was asked about and requested a lot. And so I want to send a video on Fibonacci's. This includes retracements and extensions. I'm also going to go into several different platforms and show you how we can use these tools. And I also wanted to sprinkle in Gann retracements because these are two very important philosophies that are out there in the investment world. It's been in stocks for ages, okay, many, many decades, in fact. It has been in the Forex market for the last probably 20 plus years. We also see this now being utilized in cryptocurrencies. Now, are these perfect philosophies? Are they foolproof? No, but I will show you a very effective way to use them. And I will show you how these big levels, these big convergences of support, resistance, trend line, structure, and the ebb and flow and balance of the market can be seen in stocks and in Forex and cryptos. All right, so I'm going to go ahead and get myself out of the way here, and let's dive into our Fibonacci and Gann levels for trading. Now, very quickly, we understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. And what I'm talking about today is for educational purposes only. Now, if you're following me out there on social media, I appreciate videos like this. Give me the thumbs up button for the YouTube algorithm, and you can follow me on youtube.com/Chris Pulver. We are live every Monday and Friday for my weekly outlook and weekly recap. You can follow me on Facebook. It's facebook.com/Chris Pulver Trading. You can send me comments on my YouTube videos like this. You can also send me direct messages on Instagram if you follow me at pulver.chris. Right? Also look for my new playlist. So I not only have my Keep It Seriously Simple video series, but I'm also starting a new playlist and calling it Trading Indicators A to Z and just working through a ton of fantastic industry standard indicators. Okay, so let's get into the charts here. And let's go ahead and use this white space on my chart, just like I had that giant dry erase board behind me in some of my other videos, that 8-foot whiteboard. So I've renovated the office, so that whiteboard is upstairs. So I'm going to go ahead and use this space. Now, pay attention, because if I drew this out, this is the simplicity of swing trading with Fibonacci's. Right now, on this chart, you will see that I have a lot of tools to choose from. I'll show you the Fibonacci's. I'll actually go into the settings and show you what I'm using for those calculations, but it's easier to draw this out. If you've never seen Fibonacci's, here's a really nice way to trade it, okay? So what we're looking to do is we want to identify, firstly for me, is if I identify a major level of support, okay? Because if I'm going to start buying something, I'm looking to buy it very, very low. And so let's say that we have support that is acting accordingly and the market is moving up from support. And so we have this impulsive wave to the upside, or we have this push to the upside. And then we notice that we have a correction, right? That right there is what will start our first swing to start using Fibonacci's. And so what we're looking to do is we then take the Fibonacci tool and we can plot it onto that swing. So I will go ahead and use inside TradingView, and a lot of these tools that you can have in the other charting platforms is you use a retracement tool. Okay, now I'm going to go ahead and show you from this low to high, we have now successfully plotted a swing from low to high. Now you notice with the retracement tool, I have all of these extra lines that give me my swing from, this is a 0, this is 100. Because if price were to pull back 100% of the way, then we are at a 100% retracement of the move. And so what we have these Fibonacci numbers. And so if you're interested in what the Fibonacci numbers are, these are the major ones that are used in trading. You have a 23.6% retracement level. You have a 38.2% retracement level. The 50%, okay, technically speaking, the 50% is not an actual Fibonacci number, but 50% is the balance point, right? Gann loves 50%. So I absolutely use 50%, and it is the perfect equilibrium for the market. So if we have a strong move to the upside and it pulls back 50%, guess where it's a great spot to balance the market and find more opportunities to buy? At the halfway point. Okay, and so if we see the shallow pullbacks like the 236 and the 382, that typically means that if those become support levels and the market continues to trend to the upside, it's a sign of a very strong trend. Okay, if you go a little bit deeper, we have the 61.8% retracement level. You have the 78.6% retracement level. You also have the 86% retracement level. So these are the major percentages to look for with Fibonacci. All right. And so what we are trying to do in our trading is we are looking for opportunities to build positions. Okay. So if you are a stock trader, we might be looking to build positions between this 38% and this 618. Those are very common retracement levels that the market can find. And in this area, we typically see bullish price action. We typically see bullish price patterns. We typically see a trend line break that can be just this simple. If you have a really strong move to the upside, we will look at a trend line break. And once price starts to push bullish, once we start to see some price patterns on different time frames, we will start to look for buying opportunities on the right side of this trend line, and this market will then start to go higher. And so we have our swing, we have our Fibonacci retracement levels, which are noted right here, and then we have our extensions. And so I'm trying to do this all in one tool. I find my swing, I plot my Fibonacci's, and so that gives me my Fibonacci swing. I have my retracement levels noted. I have my major extension levels that I want to trade towards, and that is right here. So if I go ahead and get rid of this guy, let me get rid of this little drawing here. Okay, the major levels I'm looking for price to go from low to high, higher low, all right, and then pushing into a higher high. Now, my favorite levels, we should be going all the way up towards a 618 extension, all right? But my favorite levels with institutional money, with institutional plays, with high probabilities, is to take this into this 127 extension. And this is a very safe way to take profit. If you're looking for this to continue to run, what you will likely see the market do is this. The market will probably pull back one more time, and it pulls back either to this past level of resistance becoming support, or it may pull back a little bit deeper, but we ultimately finish here around this 1618. Okay, so we have this low to high swing, higher low to higher high, higher low to higher high. And that's a nice completed wave sequence. And so what we are doing in our trading is we are looking for opportunities to buy these retracements and also take profit at these rallies. Okay, so, is everybody going to time the lows and the highs perfectly all the time? No. And so anybody that makes you think that this is so easy to time, they're not real traders. The reality is there are general areas that we can buy low, and there are general areas that we can take profit. And so in this upswing, it is recommended that using Fibonacci's, here we go, we have the ability to do this. We can buy this area, and as long as price does not come back down below this low, that would be our risk, right? That's why this is a swing trading method, because we have our area to buy, we have our stop area, we have our push to the upside. And you can see that our reward as we push higher is greater than our risk. In fact, let me go ahead and change the color here and illustrate that reward to risk. So let's say that we have that 50% retracement. Let's say that we have that perfect equilibrium and balance in the market. If we pull back 50% and see the market react from that, let me go ahead and use a box tool here. So if we pull back to that 50% zone and we push up to finish this wave sequence, that is your reward. And you can see here that from this level down below the swing is your risk. And so that is a very favorable, very profitable way to trade. And not only that, but there are times that we can build positions where we could add to our winners. So we can see price evidence down here to buy low. We could take our stop loss as it's going our way. We can move our stop loss and eliminate the risk. We could also get in more on this retracement because we're coming back to past resistance becoming support. So we can take positions here. We can take positions here. We can add to our winning trades. And we have these likely scenarios where price is going to go to these Fibonacci extensions. So there are a lot of useful tools or useful ways to trade Fibonacci's. It's just as simple as finding levels to plot your Fibonacci swings. So like I said, if it is at support, I'm looking for that price reaction. I start plotting my Fibonacci's from those lows. If I flip this around and I say we're going to do this at resistance, well, let's do that. So let's take our resistance here. Let me change the color. So let's say that we have resistance. And we see that price is reacting off of that resistance very nicely. So we have this resistance. And then we start to notice that price is pulling back. Well, we can quickly, before we get too deep into these retracements, we can plot a Fibonacci swing from high to low. So let's do that here. Let's take this Fibonacci swing. Let's go from high to low. And you notice, and I'll go ahead and just extend this over, okay, because that way you have an idea of where price is going. And so if we start to pull back inside of the zone, let's do that here. Let's say that price is continuing to pull back and retrace. Okay, pulling back and retracing, and we accumulate some sell positions. Again, we look for something as simple as a trendline break. We look for something as simple as a bearish candlestick formation. We look for price patterns. We look for a break to the downside. And this becomes our swing high to low. We look for entries in here with some evidence that the bears are taking over. We look for this to push down into Fibonacci extensions. Again, I would look for the same levels in reverse. I love seeing price go from high to low, lower high to lower low. And if we find this past support now in this case, because this is a swing high from resistance. So high to low, this is now support. This will become future resistance. And we look for this to complete our wave cycle. And so this would complete the wave cycle down to the 618. And we have our high to low. Opportunities for us, we could look for selling opportunities in here with our stop loss above the high. We can look for opportunities to sell again if we have opportunities over here to sell again and complete the sequence. All right, and what's important there is once that sequence is completed, take your profits, reassess. I'm a big believer in constantly looking for support and resistance, right? If I can sell high and I can buy low and I can plot those first couple of swings with Fibonacci, I can be a very profitable trader with solid reward to risk ratios. Now, let's do this. I'm going to go ahead and show you this tool. Now, let's take the swing. So we have this low, we have this high. I'm going to right click on this and show you the settings for this tool. Okay, now if you want to go ahead and take a screenshot of this, feel free, because what I have done is inside my Fib retracement tool, I have added additional percentages. And so the ones that I have highlighted, this is my 0 to 100. Okay, so where's my 0? Here's my 1. So that's my entire swing. I have my 382 retracement, my 618 retracement. If I put it in a negative value, if I go negative 0.27, that's actually my 27 extension. If I put it at negative 0.18, that is my 1.8 extension. If I put it negative 0.618, that is my 618 extension. Okay, and so if you want to do this, you have to have the retracement levels, which are a positive value, and then your extension levels are a negative value. And so overall, my swing, I'll go ahead and click OK on this. Overall, my swing is I'm looking for this area to be a buyer. I'm looking for this area is my stop, and I'm looking for this area to be my profit. And that is using Fibonacci retracements and extension to swing trade. So if you'd like to see this on a real chart, let's talk about it. So this is a currency pair. This is Aussie yen on a weekly chart. Now for several years, we have been in a downtrend on this Aussie yen. But take a look at the left-hand side of this chart, and this is why I say that support and resistance levels are so critically important. Because do you notice here that if I plot a horizontal line at this support level, do you notice where price found a low in 2020? All this craziness and chaos in the COVID crash that the financial markets experienced, we saw it in stocks, we saw it in currency pairs, we saw it in cryptocurrencies, right? We saw in all these financial markets that there was panic, there was chaos, there was bearishness, and look at what it did. All the Aussie yen did in a very short amount of time was it just dramatically dropped down into these major historical support levels. And so it wasn't a surprise that from there, we rise from the ashes, and from support, we have incredible opportunities to buy low. And so off of this major support, we can go down to a time frame like the daily chart, and you can start looking at Fibonacci swings to trade. Check this out. So we have this low, we have this high. That would be my first swing off of major support to plot and then start to trade. So there's my swing. And what I want you to notice is, did the market pull back and offer a retracement for us to buy? Because as long as we are not stopped out at this low, this became a swing that we are buying dips. And we are focused on buying and continuing to buy and continuing to buy. And this also goes with wave cycles where the market goes from a wave 1, 2, 3, 4, and 5. That was actually our 5th wave completion. And then we had the market pull back into past resistance becoming future support. We pulled back into this level here. We pulled back very close to this pocket. There's all sorts of advanced technical patterns that I was looking at on this retracement. But the fact of the matter is, this was our swing. This is our stop loss. Did we have opportunities to buy inside here? Do you notice how the market made a low, higher low, higher low, higher low, higher low, higher low, higher low, until it didn't? Until eventually this trend line was broken and the market was correcting for a brief time. But because this trend was so strong and so savage, all it did was retraced again and continued to plug away to the upside to complete the move all the way up to that 1618. So, like I said, using Fibonacci's and using retracements and extensions is not a perfect science. Okay, if it was and it was perfectly in tune with the market, we would never be wrong. Okay, but the market isn't perfect. The market is irrational. There are major forces that make these markets move. But the fact of the matter is that we can use this within good reason and good probabilities, using support, using resistance, and find a lot of evidence for us to be buying low and selling high, to give us the conviction to stay bullish in a trade for, in this case for a currency pair, this was a almost a 2000 plus pip move. That's a lot of money. And this is just the daily chart. And just recently, okay? So rather than saying like, oh, that Fibonacci looks good in hindsight, look, I use this all the time. I use this during news events, okay? I use this intraday. We had this actually the same currency pair. I'll switch to another one actually. Aussie dollar did this last week, okay? And so we finally, on the Aussie dollar, after running up and up and up, all this did was made a really good move from a high to a low. And so this was something that we were waiting for. We noticed that on the higher time frames, the Aussie dollar was overbought. It was divergent. It was extended. The bears should at least force some type of retracement. And so what we had was this very aggressive move from the top. And so this is what I did. Okay, we were already in some sell trades. We took some profit on this first move. We then plotted a Fibonacci swing right here and used the Fibonacci tool from this high to low, and we were able to get back in on a retracement. And so I was looking for a couple of levels right here. I wanted to sell this at the 382. I wanted to sell this also at the 618, and I was going to use my stop above the swing. And so I had this shallow pullback at the 382 filled. This ran down into some profit. I took some more profit. I'm looking for this to pull back again. And this is going to pull back, in my opinion, one of two ways. This is either going to pull back into this area, form a lower high, and continue to go down, or this is going to pull back where we have this high is going to be matched, and we pull back to an equal high or a flat pattern, and we continue to go lower with the swing out of the way. And so I'm now looking to reload once again on this chart. So I'm looking for opportunities to sell it there. There's a little low that I'd like to sell it at. I'd like to sell it here at equal highs. And anything deeper, I would be looking for this area as well. And I would just look for a trendline break to sell, stop area above the swing, right? So that was one particular currency pair. You can do the same thing in stocks. Let's talk about a stock that actually recently has had a pretty fantastic sell-off. Let's go to a higher time frame. This is Zoom. In my opinion, Zoom was completely overcooked. We went from a $50 stock to a $600 stock in 2020. It was insane, okay? But as the Fibonacci sequences continued to run, watch. Once we started to build this major support, right? Can you see here that we have major support? We have equal lows here in 2019 at $60. We have equal lows here at $60. We have equal lows here at $60. Guess where you can start plotting your Fibonacci's? You can start from this low right here. You can start from this low because this swing was never taken out. So we have this swing to this high, okay? Or this swing to this high. So we go from low to high, and we have this very deep pullback, but we continue to run up to a extension. A lot of these extensions also work with symmetry. I'll throw that little nugget in there. So we have this low to high swing, pulls back, and then it pushes to symmetry. And lo and behold, that symmetry, you can see how the market, when we hit this level, this A to B equals C to D. And that's where there's a lot of profit taking. But you have a new swing where this is a low to high. I'm going to plot another Fibonacci right there. Watch. Okay, another Fibonacci from this low to this high. And you notice how we pull back to the 382, to the 50, and we just start to go ballistic to the upside. And when you start these beautiful support levels, or you trade these beautiful support levels, resistance levels, and you see these swings, the market just starts to go and behave exactly how you want it to. All you're looking for are levels of retracements. And so this just kept going, kept finding Fibonacci swings over and over again. I could keep plotting these. From this level to this level, we keep plotting from here to here. You're just going to see swing after swing after swing. And the markets will have this type of behavior. You will see that in a very strong bullish trend, the market will do this. You're going to see the low to high, pull back, higher low to higher high, pull back, higher low to higher high, pull back, right? It might get a little noisy after a certain wave sequence, and then we make higher lows and higher highs, higher lows and higher highs. We might enter into some type of consolidation, right? So traders get caught on the wrong market cycle. Traders that are starting to understand Fibonacci's and starting to use these sequences and these wave cycles will have some fantastic trades. And then they get stuck in something like this where the price isn't really going anywhere. And then maybe price comes back down here and challenges this. So they're like, well, wait, is my Fibonacci sequence broken? Is this trend reversing? Maybe. But this could also be a massive low to a massive high right here. Okay, this could be the big high, and this is all a swing that just comes back into these major convergence levels again. And so this could be the swing, this could be the big 50% balance point of a larger swing. And so if you don't take a second to zoom out, if you don't take a second to look at those higher time frames and plot that support resistance, we could get lost in the weeds, right? We can get lost like in a way too granular stage of our trading by looking through these really small lenses. So it's important that, look, have some great trades, make some profit, take a second, erase your analysis, and start from scratch and look at the higher time frames. Make sure you always keep the perspective of higher time frames, right? I think it eliminates a ton of noise. I think it helps us keep our eye on the prize and go with the big picture. And all this also, I want to make sure we tie back in Gann levels, because my education on Gann was something that's very simple, right? It's very similar. I use Gann very similar to how I use Fibonacci's, and it's this. If we have a swing, okay, we've already talked about the swings from low to high with our Fibonacci numbers. Well, sometimes I see stocks do this. Sometimes I see Forex pairs do this, and now crypto, same thing. It may not pull back to a 38% retracement level. It may not pull back to the 618 retracement level, just like we want it to with Fibonacci's. But if it pulls back to a 30%, chances are it's going to retest the high or possibly go into that 1.8 or 127 extension. All right. If it pulls back to the 50%, 50%, again, by definition, is not a technical Fibonacci percentage, but it is a Gann percentage because it is perfect equilibrium. It is the balance of the market. And so Gann's belief was that the markets are perfect. And in a perfect market, everything will behave in a 45-degree angle, and the 50% will be the pressure point in which the buyers are buying again. And so we have this move to the upside where it gets a little bit stronger and it gets a little bit out of balance. And so it eventually finds its way back to balance. And then the pressure builds and we have the impulse again to the upside. And then the pressure balances. So we have, this leg here balances, this leg here balances, this leg here balances. And so you continue to take these kind of 50% swings in the Gann world and use that as equilibrium. But like I said, in my experience, someone had shown me this on, actually it was a scanner tool that did this, and it was completely based on Gann retracement levels and probabilities. And this thing was calling trades all the time, and they were super high probability wins. And a lot of it had to do with that percentage move of a 30% is oftentimes going to pop back up to the highs. And so if you have a major swing on a weekly chart, a monthly chart, a daily chart, this could be hundreds and hundreds of pips. This could be $10, $20, $30 in stock. This could be a massive gain because you don't have to swing trade this necessarily, but you're looking for the probability of, could I get an entry here and keep a stop loss maybe a little bit tighter? Could I risk less on this trade to come back and test the high and still offer a solid reward to risk ratio, right? So that's really, what I've learned from Gann is 50% is equilibrium. The Gann numbers are working in conjunction with this perfect market world, which has something to do with the 45-degree angle. So if we start our swing, we're looking at a 45-degree perfect trend, and the market's trying to find equilibrium and then pushing again. And we find that perfect equilibrium and we push again. And again, the market is not perfect. The market does have times of irrationality. We have certainly seen that in all sorts of different environments, right? So is it perfect? No. But if you look at your higher time frames, use that context, find major support levels, find major resistance levels, you have the starting points to be very effective with Fibonacci and very effective with Gann. All right. Now, Lastly here, for the last couple of minutes, I know it's been about 24 minutes, so I appreciate everyone's time here. In the trading view charts, I show you can go into this tool right here. It's just called Fibonacci Retracement. If you plot that tool on your chart and you right click and you go to the settings, you can add the additional levels. You can add the level. So if you want a retracement level, make it a positive value. If you want an extension level, okay, then you make it a negative value. And this is what I'm using for my retracement tool. I did the same thing also in my MetaTrader 4, and I'll show you that right here. So here's a MetaTrader 4. Let me go into a new chart, just start from scratch. I will get rid of the grid. Let me just zoom in on price for a second, move this over. Up here on the horizontal toolbar, you can see that I have an equidistant channel. I have a Fibonacci retracement. So I can draw the Fibonacci's again from, let's say from here. We're going to go from a high to low, and that's going to be my swing. Right now, what I will do is I will double click on this so I can drag this from the high to the low. I will double click on the tool. You can see it pop up with those little grab candles. So I will right click and go into Fib Properties, or this Fibo Properties. And so once we're in the properties, we want to look at the levels, and that's what we're going to add. Right? So I have here the 0, the 236, okay? I have the 382, I have the 50, the 618, I have the 100%. If you are at a 1618, that is going to be, again, a retracement level. The 2618 is a retracement level, so that's going beyond the swing. Now, if I also go into negative values, okay, I added those Gann levels. I added the 0.3. I added the 0.7. All right, that's a 70% retracement, but I also added my negative values, which are my extensions. So the negative 0.18 is going to be illustrated down here. Right? My negative 0.7, my negative 0.1618, my negative 0.618. These are all levels where let me go ahead and take this swing down and watch. So if you take your fib, I'll just draw it very small. There's my swing. Okay, so you notice that this is my high to low. I have all of my retracement levels. I have my extension levels. So I'm looking for something like this. Let me use a different color. So if I have my swing, these are my retracement levels. These are my extension levels. Okay, so I'm trying to put stop losses out of the way. I'm trying to put my profit in windows down here. Okay, from the 127 to the 1618. All right, and so all you have to do is go in and add those levels. Now, in this example, I'm just going to take this swing, drag this from the high to the low, and again, look at what this sequence just did. From this high to low, do you notice that the price pulled back to a Fibonacci retracement level? And that was something that we could have traded. All right, so that was the high to low. You have the 38% right there, offered a chance to go bearish, and that proceeded very nicely to the downside. So again, this is what price can do. This is a natural behavior that occurs in nature. Fibonacci occurs in nature. It occurs as a natural phenomenon in the financial markets as well, right? If you're using Gann, okay, if I wanted to see a Gann retracement level at the 30%, the probability of a 30% retracement, probability of this thing going down to retest the low is extremely high. And so if I was going to take a trade in here, again, look for some evidence that price is going to go back down. So Gann traders would be looking for this type of price action, stops above this area, and go after the low and see if it proceeds down into profit, possibly even lower. And you see that price proceeded down into profit for us. So at the end of the day, it's this. Support resistance, Fibonacci's, or Gann, using those retracements, what it helps us do is predict where to sell high, predict where to buy low with probabilities. We know where we're wrong. We know where we're going after profit to be right, and we continue to find great trades. Okay? Like I said, this is a phenomenon that occurs throughout the financial markets. Is it the end-all be-all? Is it the only philosophy and methodology that I use in trading? No. This is a very important tool that you can also use with support resistance. Use this with trend lines. And that's why in my Keep It Seriously Simple video series, I talk about this stuff, right? I mean, it all comes back to good structure, good technical analysis, find great trades, and keep trading. All right, traders, that's going to do it for today's lesson. Thank you so much for watching. Please, please, please click that thumbs up button, smash that like button. The YouTube algorithm loves it. I love it too. And also, don't forget about the other videos in my Keep It Seriously Simple video series. Okay, there are many of them. Keep watching, keep learning, free education. Also, Be sure to join me live on Mondays and Fridays for my weekly outlook and my weekly recap, and look for my new videos coming on my trading indicators A to Z. All right, I appreciate the thumbs up and the like. If you want to leave me a comment, please do. If you have any questions, if you want to see more on this, then let me know in the comments. All right, take care. I'll see you in the next Keep It Seriously Simple video series. Take care. Bye.